Hey. Good afternoon, and thank you for joining me for another office hours training. I'm Crystal Elgun, your financial strategist and small business advisor, right? And what I do as that strategist, I help you to create a solid financial relationship or a strong business foundation on which you can grow. I also help you to have some aha moments. That's the part that I really love the best is those aha moments, those self-discovery moments, so that you can see what no longer serves you, so that you can release them as soar, so that you can see your dopeness and greatness, so that you can soar. It's what helps with the breakthroughs. That's where you start to shift. That is where that magic happens, be it in your personal finances or your overall business. So it's Tuesday. Let's talk credit. And for the past few weeks, I've been talking about mistakes people make when it comes to their credit cards specifically. So go back and watch those episodes. I'm going to go back and do some more because there are some more mistakes that I want to cover. I'm going to go back and I'm going to do those in July. The reason I'm going to do them in July is because it's June and it's National Homeownership Month. So let's talk about the credit mistakes people make when buying a home. And this could be just overall credit, not specific to credit cards. So when you're qualifying for a mortgage, basic guidelines include income, debt to income ratio, and credit score. So again, those are just the basics. There are more guidelines, but those are just the basics, right? So you must meet that minimum credit score requirement for the mortgage product that fits you, right? Different products and different lenders will have different minimum credit score requirements, right? Lenders have the ability to put their own personal overlays on top of Fannie, Freddie, FHA, VA guidelines, right? And then lenders may also have lender specific products. And so again, different products and different lenders will have different minimum score requirements. I think the biggest mistake people make with their credit when they want to purchase a home is waiting too long to make sure your credit is good enough to qualify. The higher your credit score, the more loan products you're eligible for, right? So yeah, you may be able to get pre-approved with a 580 credit score through FHA, but there are quite a few other products you may qualify for that may suit you better if your score was higher. So the lower your score, the earlier you need to start working on it. Don't wait till the last minute. Oh, my lease is up in 2 months. I got a 525 credit score and I need to buy a house because I don't want to do another lease. Okay. Right? So don't wait. The earlier you start, the better. You will need time to repair it, build it so that you can qualify for the basic mortgage program. Not even the best, but just the basic, right? My clients always ask, how long does this process take? And unfortunately, there's no exact answer for that. One, because everybody's credit is different. Everybody's situations are different. You know, oh, excuse me. If two people both had a 525 credit score, there are different things that on their credit that's impacting it, right? So there's no cookie cutter time frame, right? Plus, the simple rule with credit is if you do a dispute or an inquiry, collection agencies and the credit agencies have 30 days to respond. And they don't even always respond on time or the first time, right? So it is a process and it's hard to determine. I've had people come when I was originating mortgage loans. I've had people come and they were working on their credit and they had been working with, some credit repair person, and they would say, well, I've been working with this and I haven't seen any changes. Well, how long have you been working with them? Oh, for the last 2 months, 2.5 months. Okay, well, you got to give it a minute, right? You know what I mean? Like those first 90 days, I always say are the warm up, because you just don't know whoever those disputes or inquiries are going to. You, first of all, did they respond at all? You know what I mean? So it does take time. Um, and so you want to make sure that you give yourself the time. Don't wait until you need your credit to fix it, or to make sure that it's the best that it can be for you. If you know you want to buy a house in the next 6 to 18 months, and yes, I'm pushing out that far. Listen, I always applauded buyers who came to me and said, hey, I want to buy a house. My lease is up in 7 months, or my lease is up in 8 months, or I just renewed my lease and I know I don't want to renew it again. I want to buy, right? And so, but I want to make sure right now that I am where I need to be. And if there are some areas in which I need to, tighten up on, always applauded them and always told them that, like, bravo that you're coming now, as opposed to, right at the time when you need a pre-approval. So the earlier you start, the better for you. It's going to be less stressful. You have time to make the necessary repairs. Listen, I have turned down credit clients who, like, I'm just not going to work with you if you really and truly think that you have a 518 or a 483, and you think that this is going to be a 600 in the next 90 days. Like, I'm not going to work with you, because the stress and it's unrealistic. And then you're going to moan, groan, and complain, and you're going to say, well, Crystal didn't do this and Crystal didn't do that, right? So you want to make sure that you're giving yourself enough time to go through the system, to work the process. And I do repair and build at the same time, right? And so even with that, it's still sometimes it's gonna take a process, like it's gonna take some time. And people always say, well, how much time? Listen, I'm never trying to string you along, and I keep you abreast of everything that's going on. But you want something to happen in you want, again, 100 points in 60 days. And unfortunately, the likelihood of that happening is pretty close to none, right? I mean, miracles happen, however, right? So again, don't wait until you need your credit to fix it or to make sure it's the best that it can be, so that you can qualify for the better mortgage products, or you have access to all of them so that you can see which ones fit you. Plus, you have access to the different lenders, because again, remember, lenders get to add on their own overlays. So a perfect example of an overlay is FHA says that you can do, and in Michigan for sure, I don't know if this is in every state, but FHA says you can do a mortgage down to a 580. Some lenders are still going to require you to have a 620 or 640 credit score. That's their own overlay to FHA guidelines, right? And so when your credit is as best as it can be, or enough to qualify for different areas, you then have the ability to shop different lenders. This lender over here may have more down payment assistance or grants than this lender over there. So it gives you options. And when you're looking to buy a house, you want options, right? You want options, right? So take a look at all three of those reports with FICO scores today. And here are three things that you can do, that you can start today with looking at your credit, in order to position yourself to position yourself to have the most opportunity when it comes to your mortgage financing, right? So review all your reports and make sure your personal information is correct. The spelling of your name, your address, the date of birth. Reach out to the credit agencies to get any of these errors corrected. Sometimes things are reporting on your credit report because you have the same name as somebody. I see this happen a lot with, a junior, right? Some of dad's stuff is reporting on my credit card, or my credit report, or vice versa. You know what I mean? So you want to make sure that stuff for you is absolutely right. And then look for any collection accounts. Work on getting them removed. And then three, look at your credit card utilization, not collective utilization. So the utilization of all three of those credit card of all of your credit cards combined. But look at the utilization of the individual credit cards. Is the utilization over 30%? And utilization is what is your balance versus the limit. So if you take your balance and divide it by the limit, you're going to get a percentage. If it's over 30%, work to get those balances below 30 first instead of trying to pay the balance all the way off. Just work to get them below 30%. The higher your utilization, the more of a hit that you're taking on your credit score. I've had people who had no late payments ever, but they had 4 or 5 credit cards and the utilization was 90, 95, 98%. And their scores were, 620, 640. They paid those utilization down below 30% on all of those cards, and it shot it up back to 680, right? Because they did not have late payments, the utilization was high. Remember, it's also 30% of your credit score. So, and sometimes people have limited amount of funds in order to be able to do this. So you don't want to pay it off necessarily. It works better to be able to decrease the utilization. If you got 4 credit cards and the utilization on all 4 of them are over 80%, the biggest impact is going to decrease the utilization of all of those credit cards. Below 30 is fantastic. Start with the cards that will take the smallest amount of money to decrease the utilization below 30%. You may have a credit card that has a $200 limit and the utilization is at 90%. But then you can also have a credit card that limit is $5,000 and the balance is at, or the utilization is at 90%. Well, to get utilization down below 30% is going to cost less money out of your pocket on that limit that's $200. So start with the ones that cost you the least amount of money to get the utilization down. Get those down first and then tackle the larger amounts. You may not even be able to get that one down to 30%, but how far can you get it down? And if you start with the smaller limits first, right? And then you start to see that impact. Do you need to bring this one down to 30 or do you just need to work on bringing it down some? You feel me? So you got to take a look at it and figure that thing out. Don't wait until you need your credit to take a look at it and to start to fix it, right? Look today, fix it, and then practice good management, good credit management always. So, what's my favorite thing? It's always going to be when we talk about credit, that credit checkup. And the reason that I push this so much is because I I see so many times in doing these checkups, I see so many times people did things that didn't have the impact that they thought they would need. When I get a new credit client and I'm looking at their credit report and I see they've paid off all of these collections, but their credit score is really, really low, it didn't have the impact that they needed. So before you go out and spend money and doing things, um, and you're not certain of what that impact is going to be, that's why that credit checkup is so important, because it could save you some time, energy, effort, and money, right? So get that credit checkup. The other thing is I do something where I call Mac Ready. That I do is, and that's mortgage and credit ready, because you can have a credit score, but you still may not be mortgage ready, or you can think that you're mortgage ready. And when I say that, I mean, you may have, a 750 credit score, but your debt to income ratio is really low, right? So you're like, yeah, I can qualify for a mortgage, but you can't qualify for the amount that you want, right? So we create, or their credit is just not good and we need to do some things. So that Mac ready session, we create a strategy for you. I had a recent one that I did. A woman wants to buy a house and perfect scenario. Her credit scores were, they were 615, 620, 625, somewhere in there. And I'm thinking of all three of them. Um, And so, yeah, she could qualify for FHA in most places. She could, for a couple lenders that I know that I could send her to, she could have gotten a pre-approval then. But the issue was she wasn't a full 2 years out of bankruptcy. So her bankruptcy, 2 years from the discharge date of her Chapter 7 is like July 29th, right? And I says, okay, well, you can't do anything today. If it weren't for this, could you get a pre-approval? You could get a pre-approval. But because you have this time, because of she can't wait. It's not until July 30th that she can apply for a mortgage because that's the 2 years out of bankruptcy discharge. I mean, 2 years from her discharge date. It gave her time to pay down some of the credit card debt. She didn't have crazy balances, but it part of the strategy was putting some more money aside because she really made decent money. Part of her problem was she has these people in her family asking her for money, right? And I said, you have to tell them you don't have it because you're trying to buy a house. So you need your money for, yep, you might be able to get down payment assistance, but what if it's gone when it's time for you to do that? She can't rely on that, right? Plus, you need money up front for private inspections. You always want to do a private inspection because you do the first one, right? And you decide, nope, I don't, based on the inspection, I don't want this house. Well, you're going to need to do a private inspection on the second one. You don't stop. So you always at least want to have money for two private inspections set aside. Plus, you're going to have to write an earnest money deposit. Even if you get down payment assistance, that earnest money deposit, right, still has to be paid by you. Plus, whatever else you need. You're going to need money when it's time to move. Down payment assistance doesn't cover that. Moving truck, you know what I mean? All of those other things. So saving money is never a bad thing with that. So part of her strategy was telling other people, no, you don't have the money to give to them. The second part of her strategy was, while you have this time, pay some of this down. It would take her score over up above that 660, 680 mark, where now she qualifies for pretty much every program out there. And that means she can go to different lenders to see what type of down payment assistance they had, right? And what kind of programs they offered. She had opportunity and options and the ability to shop with different lenders. Less about rate because the rate is going to be what the rate is going to be, but also, do you have to pay more points for this rate because your score is lower? So all of these things, being able to put that strategy together, that MAC ready, making sure your mortgage and credit ready. Debt to income ratio wise, she was fine. Part of that MAC ready consultation is looking to see if is your debt to income ratio in line? And if it's not, creating a strategy to be able to get that down so we can see, you'll know how much you can qualify for. Then does that even work in this day and era of unaffordable unaffordable homes? But being able to create a strategy that when you follow that strategy, right, you then become, MAC ready, so mortgage and credit ready, and you can go off and get your pre-approval. So I also do that sort of thing. So you just want to make sure that you are ready. The earlier that you start the process, the better, right? The earlier you start the process, the better. It's about steps, right? Everything is a journey. And so you don't want to be overwhelmed and overloaded. And when you're going through this process, the mortgage process, people will say that the mortgage process is stressful. I don't think it's stressful. It is a lot, though. But the better prepared you are, the less stressful or the less a lot it is, right? So the earlier you start, the better. So here are your things to do. Pull your credit reports with FICO scores. See where scores are, right? Again, shoot for 680. Like 720 is great, but if you know that you need to, typically when you start to do things, and like my credit clients, because again, I do credit coaching as well. So I'm showing you how to build and how to use it effectively so that it's positively impacting your score. You're going to get to the 720. You're going to get to the high sevens. Shoot for the 680 first, because then you're learning how to do it. We're cleaning it up. And then the practice is going to get your scores over 7 and closer to 8, right? So pull your credit reports with FICO scores to see where you are now. Review your scores and the reports. And the reason why I say review the reports is because you want to make sure that what's reporting is accurate. If there's collections, we need the collections off, because those collections can also impact what kind of program you qualify for. Or I know FHA guideline says if you have collection accounts that collectively add up to $2,000, they're going to want you to pay them off. Well, you want to take care of that, however taking care of that winds up being, but you want to take care of that before you're in that mortgage process. You know what I mean? So, but it's that strategy. And somebody would say, well, I'm going to pay all of these off. Well, does it necessarily make sense for you to pay them all off? Right? So review your scores and the reports, and then get to work to get your scores and your reports where they need to be, but not only to just get them where they your credit scores and reports, not only getting them where they need to be to qualify for a mortgage, but learning how to use credit effectively so that you don't wind up in the same situation again, but then that you're able to use it on the go forward to benefit you. Right? That's the biggest lesson of it all. So remember to always give yourself some grace. I have people call me all the time and talk about, they're embarrassed about their score. And I'm like, listen, first of all, this is a judge-free zone, because back when I went through my financial storm, I had $20,000 credit limits, $30,000 credit limits. Financial storm hit. Oh my God, right? There came the bankruptcy and all of the things. And I always say there wasn't all of these, credit coaches and gurus and things like that out there when I was going through it. So I had to learn how to do the thing. I had to research. I had to study. I had to learn what worked. And so no way am I going to judge you, because I went from 750 to a 580 or whatever it was, right? And so I had to work to get it back up to above that 780. And so don't be embarrassed. So always give yourself some grace. What happened in the past happened in the past. The thing that, if anything, if you're going to be embarrassed or feel bad about something, that something would be you're not trying to improve your credit. That's the problem. Improving it and reaching out for help and asking the question is not the problem. Having bad credit before and making credit mistakes, that's not the problem and anything to be embarrassed about. Not fixing it, not learning how to use it effectively is the problem, right? So always give yourself some grace. Keep striving. Never, ever, ever give up on you, and invest in you. It is the best investment you will ever make. I promise you. If this information has been helpful to you, please, please, please subscribe to the channel. Turn notifications on so that you don't miss this information. Go back and watch the past episodes. There will be tons that will speak to whatever it is you need financially. And then share this channel with someone else. Share this channel with someone else, because you never know what people are going through right now that they are not talking about, but that they are at home praying about. Praying for a breakthrough, praying for some help, praying for some information. I give so much information here in these office hours, because everybody can't afford a coach, which is why I started doing the office hours, so that you can get the help and the information that you need, but you still have to do the work, right? You still have to do the work. So share this information with somebody else. I thank you for joining me today. All of the scheduling links are in the description below. Enjoy the rest of your day, and I will see you tomorrow. Thank you for watching. I appreciate your time. Be sure to join me for the private online Q&A immediately following. The link is in the description. And if you haven't done so already, please be sure to subscribe to my channel and turn notifications on so you never miss this opportunity. Thank you again, and I will see you on the other side.